So to help set up the trading day, we welcome in Kevin Hincks, live from the CBOE this morning for our pre-bell playbook. Good morning to you, Kevin. All right, so we've got the futures coming off the lows this morning, perhaps all thanks to some of the data we got this morning. We're in a bit of a data fog, but we are getting a little bit more clarity. What are you seeing out there this morning? Good morning.
Good morning, Sam. Yeah, after a bit of an ugly day yesterday, a better than expected ADP private payroll report has the futures, like you mentioned, off their lows and actually turning positive now as we get to the 9 o'clock hour. Now, what did we get? We got the ADP private payroll report that came in 42,000 jobs. That's better than the 25,000 expected, much better than negative 32,000. Remember, we had 2 negative months in a row for jobs, so a nice jump here to 42,000. And interesting, of that 42,000, 74,000 of it was companies 500 employees and higher. So the larger companies were doing a lot of the hiring. Here's how it broke down. Companies with 1 to 19 employees, down 15,000. 20 to 49 employees, up 5,000. 50 to 249, down 25,000, 250 to 499, up 5,000, and then again, over 500, 74,000 jobs. Now break it down by sector. Trade and transportation utilities up 47,000 jobs. Education and health services up 25,000 jobs. Financial activities up 11,000. Those are the main positives. Leisure and hospitality, one that we watch for the services sector, down 5,000 jobs. Professional and business services down 15,000, and information services down 17,000. Wages were pretty much flat from month to month as job movers actually got raises compared to job stayers, Sam. But all things considered, a market that may have been bracing for a weak number, not so much as we get a nice bump to 42,000 private payrolls.
I suppose it's an encouraging number, and particularly when you look at some of the headlines that we've been tracking with regards to IBM becoming the latest to slash some jobs as well. But I suppose we've got to give some credence to these private reports, given that we don't have much else to work with. So certainly as far as that number is concerned, looking pretty positive this morning. We throw it ahead, of course, to services PMI out later in the hour. But just on another data print, mortgage applications, what are you seeing there as far as the weekly survey?
So mortgage applications slipped slightly from last week, but you remember last week was a big jump of 7.1% on the composite number. Today, down 1.9%, down 0.6% in terms of purchases, and refinances down 2.8%. But if you look at the 2 weeks, mortgage applications have done extremely well in the aggregate for the last 2 weeks. So a slight slip, though, this week in mortgage applications. But we are 35 days from a Fed meeting, Sam, as you know, and the percentages for our Fed rate cut that had dropped to 60% are starting to creep back up. As I looked this morning, 72% chance of a 25 basis point rate cut. So overall, the mortgage applications business, housing in general, they need and want lower rates, as you know, Sam.
Yeah, absolutely. And obviously we continue to pass over a number of these report cards as well, the second biggest week as far as earnings are concerned. So keeping us pretty busy. I'm just looking across some of the names that really stand out this morning. Mickey D's talking about a challenging environment. You've also had Carver as far as, some of the fast food and casual dining, raising some alarm bells there, particularly about the younger demographic. And then you have on the other side of things with technology, AMD with a double beat. It seems like the inline margins is the worry here, but I suppose it doesn't help to report on a day where there had been so much concern about AI valuations and that conversation. So what are you seeing? What stands out to you about some of these earnings, Kevin?
What's really impressive is McDonald's. McDonald's is currently up about between $8 and $9 pre-market. That's on an earnings per share miss this morning. But if you look at the numbers, sales were better, revenue was better, and they're guiding strong. So that stock that had sold off in the last couple of weeks during the month of November, jumping back up about $8 or $9 pre-market. Yeah, remember, We talked about this a lot yesterday on the Schwab Network. When you look at AMD, they have rallied so much, just like so many of these tech giants. You put up good numbers and you still can't hold the levels that we traded up to. So not surprising. I've got AMD down about, let's call it $5 or $6, somewhere between their pre-market. But that's a flesh wound compared to how much the stock has rallied over the last 3 and 6 months. I'll give you the number, Sam. The last 6 months on AMD, up 153%. So a couple dollars on the downside, that's a flesh wound, Sam.
A flesh wound, yeah, certainly. I mean, many analysts are sort of suggesting that AMD very much is a 2026 story, particularly how it positions itself to compete with the likes of NVIDIA. It wasn't a bad report, as you say. So thanks so much for getting us across some of those key stories this morning. Kevin Hincks, I'll catch you a little bit later.